Hey everyone, welcome back to the Digital 3.0 podcast. I'm your host, Austin Richard, and today we're diving into a topic that's been getting some traction lately, and that's Bitcoin adoption. Whether you're a newbie to crypto or Bitcoin, or you're just a curious investor, or you like watching Bitcoin do its thing, you're in the right place, because today we're going to break down Bitcoin's journey so far, where it's headed, and why it could become as normal as paying for something with your phone, or possibly even easier. So buckle up and let's start a little history lesson, but don't worry, it's not going to be traditional history and it's not going to be boring. Okay, let's rewind to 2009. The world's first Bitcoin block was mined by a mysterious figure or figures using the pseudonym Satoshi Nakamoto. We still don't know who they are or what they are, but for all we know, it could be a janitor at MIT. I think there was a movie about that, But what we do know is that Bitcoin's early days were kind of like the Wild West. It was really a handful of kind of techie type people, libertarians. They were mining it and using it on websites. They weren't really using it for things like Starbucks yet, but let's just say they were using it for less than mainstream purchases on sites like Silk Road, which, if you know anything about that, is pretty sketchy. Okay, but this really got people's attention. It kind of brought Bitcoin onto the scene, if you will. And then there was the guy that he used 10,000 Bitcoin to buy 2 pizzas. And that was a fundamental milestone for Bitcoin. It was the first retail transaction. Today, the dollar value of those Bitcoins is like over $670 million. So that's some pretty expensive pizza. Now, who's the genius now, right? Well, this phase wasn't all about black markets and overpriced pizza. The early adopters saw something revolutionary. It was a sovereign digital currency, not controlled by any government, didn't have any corporate board, has no address, and there's no involvement of central banks other than trading your dollars for Bitcoin. The concept was really, really just pure gold, or I guess digital gold. But here's where it gets interesting. Even though most people have no idea really what Bitcoin was, or even potentially what it is now, or how to use it, it was the simple idea that anyone, anywhere could transfer value to anyone in the world without permission, without needing a middleman. It is truly groundbreaking. It's kind of like email. When email first came out, most people were like, oh, okay, I don't really need this. I'll just mail a letter. What's the big deal? But then if we fast forward a few years, everybody has email. Everybody checks their email a couple times a day, maybe. It's essentially, it's in some cases replaced phone calls. You can send data. It's definitely killed the fax machine. Whether it's good or bad, email's here, right? It's pretty much become a norm. Well, Bitcoin is setting the stage for something even much, much bigger than this. Something actually probably truly revolutionary, and probably something that we will never see anything that will take the place or see something that surpasses the revolutionary quality of Bitcoin. But let's fast forward a couple of years to 2013. This is where Bitcoin really starts getting attention beyond those initial early adopters. Prices were spiking to, I think, almost $1,000. That's when I bought my first Bitcoin, and everyone was seeing dollar signs, and should I say Bitcoin signs. And then I was like, oh boy, what did I do? What did I really put my money towards here? But then we started seeing companies like Overstock, Newegg, and even Microsoft say, we're pretty much already into the internet software and the internet business, and we have the hardware, business. So yeah, sure, we'll accept this weird internet money. So this got where it got kind of serious. We started pulling people in from the institutional crowds. They started to show up, and hedge funds and investors were like, "Hey, what if there's something to this whole, digital internet Bitcoin thing? We don't really want to miss out on this, I don't think." So it became really legitimate when crypto exchanges like Coinbase and Kraken were created to make it easier for everyday people to buy Bitcoin without learning how to code or to mine it in their basement, not, with their fancy computers and everything. But then if you skip forward to 2020, now you have companies like MicroStrategy and Tesla, they started exchanging their extra capital of, millions of dollars worth of Bitcoin. And so they're doing this, or have said they've done this, calling it a hedge against inflation. Because if you let's just say you take $5, and I don't know, 2013, you bought $5 worth of Bitcoin, and then you have someone else that said, I'm going to keep my $5. Well, what would have more purchasing power, that $5 worth of Bitcoin or that $5 worth of cash? I think you see where I'm going there, okay? So this is when Wall Street officially got in the game. And everybody knows that once Wall Street is on board, that's when the ball starts rolling, okay? So shortly after that, we began seeing payment systems integrate Bitcoin into their platform, like PayPal and Square. They allow their users to use the app to buy and sell and even hold Bitcoin. This is huge, okay? It's already happened. This has actually happened already. This is not breaking news, okay? What this has done, though, is it's signaled a shift. Bitcoin isn't just being traded, it's actually being used, and it's being accepted. That means adoption has started. And then the Bitcoin ecosystem has established something we've really been missing for over a decade, and that is the trust. Now we have trust in Bitcoin, which was it's something that was left out, and now with the adoption, we've gained that. So where does this put us in 2024? Well, Bitcoin's gone from being a speculative internet experimental ledger system to being part of actual corporate treasuries. In fact, if you think about it, CEOs have a fiduciary responsibility to their shareholders. And what's the best performing asset over time? You guessed it, Bitcoin. So that's why big banks like JP Morgan, Goldman Sachs, those big guys, they're offering Bitcoin services to their clients. So we know PayPal's on board. We have Robinhood, the app that's a stock purchasing, crypto purchasing application. That's a really big deal that they're in the game. Even MasterCard and Visa are kind of dipping their toes into the crypto world. And then you've got Bitcoin ETFs. This is making it super, super easy for investors to get on the Bitcoin train without holding the actual coins themselves. This is next level legitimization, okay? And then you have actual countries that are getting involved with Bitcoin. El Salvador made Bitcoin a legal tender. The whole country said, yeah, we're using Bitcoin as money, so what? Whether you think we're crazy or we're a genius, it's a big deal. And we're going to pave the way for other nations to follow. And El Salvador has introduced a really innovative plan known as Bitcoin bonds or volcano bonds, named after the country's geothermal energy, which powers Bitcoin mining operations. These bonds are partially designed to finance the development of a Bitcoin city. It's a proposed tax-free city that is powered by renewable energy from that geothermal volcano. This idea, that the Bitcoin bond idea, what it does is it helps generate revenue by attracting international investors and cryptocurrency enthusiasts to El Salvador. In fact, I have a friend that is actually buying a resort there and it will only accept Bitcoin. Their goal there is twofold: to raise funds through Bitcoin-backed bonds and to pay down their sovereign debt, and then to leverage their geothermal energy for Bitcoin mining, which could generate revenue for the whole country. So if it's successful, this could provide El Salvador with alternative revenue stream, and potentially reduce the reliance on traditional forms of debt from the IMF and the World Bank and things like that. It's a pretty speculative strategy because it does depend, on the nature, the volatile nature of Bitcoin and whether sufficient international interest materializes. So we'll see what happens. So let's look we've gone through everything up till now. Let's look at the future. What's next? Where is digital currency like Bitcoin going? Well, spoiler alert, we know for sure it's not going away. because you have institutional investors. They're just getting started. We've got pension funds, sovereign wealth funds, big investments firms saying, hey, we'll allocate a small chunk to Bitcoin, kind of get our feet wet, see how it goes. Imagine when it becomes a normal part of everyone's investment portfolio. It's got to be in the trillions of dollars funneling into Bitcoin. And the more Bitcoin ETFs we get approved, which there's several thousand now, especially in the US, it is really, truly game on. And this is going to bring a lot of new money into the space, and we don't really know what's going to happen. So here's the kicker, though. We could see corporate treasuries stack Bitcoin like they do with cash or gold. And a lot more companies are going to follow the Tesla or MicroStrategy strategy and their lead that they've taken and hedge against inflation with Bitcoin. Not saying that every company is going to do it, but smart ones probably will. Now let's get into the Bitcoin tech. And what we're going to see here is Bitcoin as it stands is pretty slow for everyday transactions. I mean, you're not really going to wait 10 minutes for a confirmation to buy your morning coffee. That's not going to happen. The sector is creating solutions to the problems that Bitcoin creates. They're not just saying, well, we got a problem here, let's just abandon Bitcoin. For example, they've created what's called the Lightning Network. And this is a layer 2 solution and I won't get into that, but basically what it does is it speeds up transactions and makes them cheaper. So if the tech continues to grow, we could see Bitcoin being used for everyday payments like groceries, coffee, or even pizzas. And that's kind of like the transaction would be just as fast as your credit card or debit card, or maybe faster. So we're probably going to see other countries get on the Bitcoin bandwagon, especially in places where their local currency is, let's be polite and say it's not stable. And El Salvador started it, but these other countries have unstable economics might just say, hey, what the heck? What do we have to lose? Let's try this Bitcoin stuff. Yeah, maybe it's risky, but so is our national currency. I mean, who wants to hold their currency in Bolivian dollars? No offense to Bolivia, but I don't. So that's where Bitcoin really makes sense. So, because the beauty of Bitcoin is its scarcity. There will only ever be 21 million Bitcoin ever mined. And I won't get into mining, but it's a process. I have a whole other podcast about it. That's it. There won't be any more Bitcoin no matter what. They can't just decide to start printing up a bunch more like governments do with fiat currencies. And then, so people are going to begin to realize this and understand what this truly means. You can actually mine more gold. You can actually find more diamonds. Heck, you can make diamonds at this point. I understand it's not the same, but so as more of the big players get involved, the demand for Bitcoin continues to grow, but supply is going to stay the same. And actually the supply with people that hold Bitcoin for more than 1 year is continuing to grow, and that's called hodling, HODL. It's kind of a play on the word hold. So that's why Bitcoin has long been kind of thought of as digital gold. I have my other ways I like to think about it as digital energy, or even digital real estate for that matter. So this is going to actually serve the same role as gold potentially in the world economy, and we'll see how that plays out. So what if Bitcoin would become a global reserve asset? I don't know if you heard me right, but a global reserve asset. And there are a lot of predictions that say this, but I know it's a grand idea, but you never know, right? I mean, we already compare it to digital gold or to gold. So do you think central banks are adding Bitcoin to their reserves now? It's not that crazy of an idea, is it? So imagine if the world's largest banks viewed Bitcoin the way they view gold. A hedge against inflation, a store of value. That would probably drive a lot of adoption on a scale we haven't even seen yet. And it's going to start with the bank employees, and then it gets out to Wall Street and all the other markets, and then it's real, okay? But let's talk about the elephant in the room, volatility. Right now, Bitcoin's price has its maybe 5% swings, and I know that scares a lot of people off. But as more of the institutional money starts to flow in, you have liquidity increasing and volatility drops. So when investors get that comfy feeling, they have and with putting their capital into something like this, it's game on. Of course, we can't ignore the challenges. What we're seeing now, and we've been seeing them since I can remember, is regulation is still a big question mark. Bitcoin is not considered a stock or commodity, I guess. But the governments are trying to figure out how to tax and control Bitcoin, as governments do, without stifling innovation. And then we can't continue to talk about it though without talking about the environmental impact. Whether you're on board with the Green New Deal or whether you're not, doesn't matter at this point to me. Mining Bitcoin does take a lot of energy, but we are looking for solutions. We are working on them. For example, El Salvador using geothermal. But a lot of places are using renewable energy or finding ways to mine for more efficient, figure out how to mine more efficiently. So let's not forget, Bitcoin is not alone in the crypto world. Okay. There are other coins like Ethereum and Solana, and they're doing things a little differently, but competition is good. And so it's always going to be a factor, but I think it's a net positive factor. So Bitcoin does have first mover advantage. It has arguably the most secure blockchain, and its strong position is really a store of value, and that is hard to beat. Okay. So we're seeing Bitcoin's adoption start to snowball. We're seeing the adoption become bigger and bigger and bigger, and the future is looking really bright. From institutional investors, piling it on, potential nation state adoption. It's really shaping up to be more of just a passing trend. It's evolving, it's growing, it's according to many, it's actually even become a fundamental part of the global financial system. And as far as, the shows in the morning, the business shows, they're bringing up Bitcoin. They have Bitcoin on their ticker. So it's here, and it's probably, it is here to stay. If you're on the fence about Bitcoin, I'm going to leave you with this. It's not too late to get in the game. Whether as an investment or a payment method or a store of value, Bitcoin is here to stay, and the future is wide open. I remember buying some Bitcoin at, I think it was 5,000 and thinking, oh my God, I overpaid. I can't believe I paid this much for it. And today, for example, the price of Bitcoin on October 16th, 2024 is $68,000 for one Bitcoin. So keep that in mind. It's not too late. Thanks for tuning in to the Digital 3.0 podcast. I'm Austin Richard. I will catch you on the next episode. Stay curious, stay informed, and remember, the future is most likely digital.